So the first topic, this movement from the ICOs to the STOs. What was sort of the catalyst that you think that sparked that, and why do you think what sort of regulations, changes in regulations, do you think force there to be a movement from ICOs to STOs? I don't know how we want to let whoever wants to answer to just whoever puts their hand up first. You get to go first.
I can begin if
Yeah.
you want. So I think before we had any regulation, it was just too unsecure for firms to make STOs, because if I do an STO, that's a right on a firm. Could be a share, or could be
Yeah. So maybe first, for some people that don't know the difference.
So the difference is if ICO is initial coin offering, and STO is security token offering, and if I just offer a coin that's just a utility, maybe I can buy anything with this any day, but it's not a right against a real right against a firm. And before we had any regulation, which said that yes, tokenized things could be contracts against anyone else, it was impossible to make STOs. Because we have this regulation now, it became possible, and this all, in my view, this also caused the trend to have more STOs now.
And do you think that having the ICOs and having so many of the ICOs be, Ponzi schemes or failing, why do you think that the current ICOs are not being forced to sort of transition to an STO?
Thank you. I first have to object a little bit, because I do not want to come up the impression that there hasn't been any regulation or any applicable law. We always had the law, and it has been applicable, but most of the ICOs didn't care. So that's an issue. So there has not been new law, in probably the crypto custody law now with the anti-money laundering law, but the prospectus law and all capital markets law in the regulatory field have been applicable, and most of the companies that did an ICO didn't care. So that's one important point. And the other thing is the change between an initial coin offering and now to the STO is that it's matures and it's more stable for investors, because if we look at the BitBot case with first approval of a BaFin prospectus, there has been written down a lot of information. You can check, you can verify, and of course it needs more impact for the company to set up an STO, because you really have to prove your processes, your underlyings, and we've seen, I've advised over 20 ICOs, and we saw about, 80 business cases, and sometimes you think, okay, let's do a pitch deck and raise money, and that's it. And so this has developed, and for good cause, and it's great to see an environment that's developing in the SEO world.
Maybe if I can add, actually, I wouldn't even claim that the early ICOs simply didn't care, because I must admit, even we lawyers did not know how to apply the existing laws to this new phenomenon. I remember very well early 2018, when we were in the final stage of issuing the first, what we call token regulation paper by the Bundesblock. We had night-long calls and really debating, what our position could be. And I'm very happy that the group concluded, to come to a certain position, and half a year later you could basically read the same in the BaFin statement, right? So I really think if a group of really knowledgeable people gets their heads together and really tries to nail it down, then you can figure it out. And since then, I think we quickly gained knowledge and experience in that field, and from that on also the ICOs went down, because it was more clear and outspoken what to do. And I think we still need to distinguish. ICOs do not need to be STOs, right? So if you issue a utility coin, a voucher, or a membership token, then you're not in the STO field nowadays, right? You still do not need to issue a prospectus.
But can it be used to raise equity? Or
No,
can it be only used for utility?
Well, it can then only be used for the utility, right? That has tax and accounting consequences and so forth. So it's a different animal. And I think but that's not the point. I think the point why the ICOs crashed was simply, human greed, right? The ICOs were invented for funding community projects, right? They were actually initiated with something good in mind. And then a lot of ICOs came up which really had nothing to do with that, just people wanting to make money. And that was what really harmed the ICO idea in the end.
Yeah, a couple of things I would just, from a more practical point of view, rather than the legal point of view, is that ICOs were a new way of crowdfunding, and a lot of people thought that they could make a quick buck. But as people started losing money and didn't have protections, people got smarter. The retail investors were looking for protections, so I think consumer protections start to come into play, and also the access to institutional money or regulated funds. There's this promise that if we have some sort of security prospectus or some regulated infrastructure that we'll have an influx of money coming into the industry. And so you're seeing investors getting smarter. You're seeing people that learned from fraud and losing a lot of money, and they're looking for consumer protection, I would say, is another reason why we're seeing the movement.
Yeah, and I think you make a really good point there that there was this new asset class that had so much base money circulating within it, and the institutional investors were kind of like, how do we get to be a part of this? And it kind of segues into my unless there's someone else that wants to cover a bit on this
it's just
topic.
No, yeah.
You have to hold it a little bit closer.
In a way, the ICOs are a financial product. The ICOs, not as STOs regularly, are a financial product. So that's why I think a little bit of regulation isn't that bad, because we wanted to have the same qualities as a regular financial product. And I think we can all, expect that type of quality from a financial product. So if it all goes wrong, we look at the regulator and say, why didn't you do anything? Well, if it would be the Wild West, I think it's better. Regulation is not always bad, but it does increase the cost of doing business. So.
And do you think that's why maybe the STOs have not been as popular as the ICOs? There was sort of this crypto craze during the ICO time, and then now the STOs came and they're regulated, and there are security perspectives, and there are auditors, and
many of the ICOs,
it hasn't really caught on as much.
Many of the ICOs were ran on the Ethereum platform. So the price of the funds they were raising were not dollars or euros. It was Ethereum. So during the ICO craze, there were many people buying Ethereum. So the price of Ethereum went up. So the amount raised, in sky high. But after that, when ICOs started cashing out to pay the operational expenses, because you can't pay electricity in Ethereum in Ether, that's where the whole thing came tumbling down. And I think this is part of the reason why many of the ICOs failed. I know some that just didn't have enough money anymore to pay their developers because they didn't cash out in time. I think this is...
We're fighting.
I'd like to add, I think we have to see that the ICO world has been at some point a closed shop. It has been a shop for people that are familiar with cryptocurrencies and Bitcoin, Ether, you name it. And now the STO market, this is a fully regulated digital security. So you can open up the mass market with it, and I think it would be helpful, and it's the best way to do that if we take it from the nerdy side and leave it to the mainstream people, that my mom or someone else can do it just with a fingertip with a smart device. And so we're using blockchain as technology as a backbone, and that you can invest in euros. And probably we will see some euro stablecoins, euro token, that it's more convenient to invest over a blockchain into real securities. And so that is the differentiation. And if someone is approaching an STO, he will compare it to a regular security. And so the digital security has to compete the regular off-chain, offline security with his banking advisors telling and getting refunds from advising someone into security. And that's the differentiation. So you can't really compare it. I think the STO is very good for the market because it's opening up. And you do not have to be a coder, a developer to invest in an STO, and that must be our approach. That it's really for the mainstream, for the people on the street.
But it goes back to the fundamental thing, though, whether it's an ICO and STO, the product has to be there, the traction has to be there. So one of the problems with the ICOs is also the fact that they were just projects, like we used to call it slideware. And they were literally slideware, and you had people raising 30, 40 million on basically ideas. A lot of them were stupid ideas, some of them were good ideas. But the fact is, you don't raise that much money on just nothing, right? So that fundamental aspect is not going to change. So the STO is going to be successful if the companies that actually go out there with the STO, which I think is a fantastic tool to create effectively more inclusion in terms of who can actually participate in this economy, this private equity economy. But at the end of the day, the companies that go out there have to have something to offer, and they owe it to the people they're gonna present these prospectus to, and it's just a good business practice.
One thing I would say about why STOs are not taking off as quickly or as we would probably all like to see in the industry is the roadblocks. So it's not just about the legal regulatory clarity, but it's also about the technology that can support KYC, or know your customer, for people who don't know this term, on identification of both sides of a transaction or both counterparties. And also understanding, based on that person's residence or citizenship, what laws and regulations need to apply for that transaction. So the infrastructure also is not really yet there. And also, when you have primary issuers or secondary markets with exchanges, you also don't have the liquidity. You don't actually have the buyers and sellers that can support this type of a market yet. I think there's a lot of experiments or projects out there to try to solve this problem, but it's still not yet there. And so, for example, at spot9, we've partnered with Swarm, which is an interesting project, a blockchain-based, decentralized, autonomous project, where we hope that we can, address some of these technical and regulatory challenges through smart contracts, which is kind of innovative. But at the end of the day, we still need to have liquidity. So if you look at ICOs and utility tokens, you have Binance with the highest volumes and the highest liquidity, but they're not regulated and consumers are not protected. So then, if you look for a regulated exchange where you can buy and sell STOs, it doesn't exist. And so that's one of the hurdles. Yeah, not yet. Exactly. Exactly. I stand corrected. So but it's a project, and it's the industry is evolving, and it's because of these roadblocks are more complex and difficult to overcome. I think it's going to take more time.
I also think ICO and STO has not so much to do with avoiding or not avoiding regulation. It depends on the use case. If you have a payment token like Bitcoin, you need not so much regulation, because with a Bitcoin you have what you have. It's not representing anything else. If you want to have a share, the token is representing something, and it's not possible that the blockchain technology can guarantee rights and enforce rights against third parties. Therefore, I need regulation. So for this market with STO, I really need regulation. It's not nothing bad. It's good for firms who raise money, and it's good for investors who have some protection. It's helping that the market can develop, and that's why I do an STO to represent, because I want to raise equity or debt, then I do an STO. If I do not need that, if I just want to create a payment token or any utility token, I do an ICO. So I would distinguish by the use case. It depends on the use case. If an ICO is the right thing and I do not need so much regulation, or an STO is the right thing and I need some more regulation. The same like for shares and that's we have already for classical shares and dApps. Yes.
I would like to add to your fundamentals topic that you raised. You know what? My big concern with the STOs is that only those projects or companies start to look into STOs currently, which do not get funding elsewhere, right? So I would really love to and invite, really, high-end corporates to do fundraising via STO, because I'm really afraid that we will damage this market right in the beginning with, only having the wrong entities raising funds through that.
Yeah, you're right. It's a maturity thing. Because if you look at the crowdfunding, that's exactly what happened with crowdfunding. The companies who could not raise at the beginning at least, couldn't raise somewhere else, got into crowdfunding, and one thing leading to another, crowdfunding became more popular. What happens now in crowdfunding in most countries that you manage to do crowdfunding fundraise if you've had a good venture capital firm backing you, right? So there's still a precondition. But I'm with you on this. I think we need to find ways to encourage new companies or even existing startups to have this as their choice number one. Because the problem you have a monopoly, not so much a monopoly, but you have this sort of clique of venture capital firms in Europe that, for a lot of them, they're not very good, they're not adding a lot of value. And somehow there's a bottleneck with this funding, which actually stifle innovation. Like in Germany, it's such a big country. There's so few venture capital firms. It's just ridiculous. The amount of money which is available in Germany for the size of the opportunity, the dynamism of the economy. So if you just look at this, you need to open up these funding options and the investment options to the wider public.
To add, I'm quite optimistic. So I see in my advice practice some really renowned companies from bigger size that are doing feasibility studies and preparing STOs just as an MVP to see how does the technology work, and especially when you're in a business that's related to a broad consumer area, then you have clients and you might want to attract these clients by offerings that you do directly and not through third parties or intermediaries. And we will see that happen. So like I said in my introduction, so next week will be, hopefully if we get all the processes done by the end of the week, there will be an issuing of a very renowned company. I would assume that all of you know the brand, and they do an offering with a security token. It's a small size, and they could finance on a different way. That's not the issue, but they want to try it out and set an example that also a big company can do that, and that there's a market. And I think that's very important to broaden up the scope. And also, when we are together, we should not speak about it's only for fintech, startups, or small companies. The STO will be the future of capital raising in the next 10, 20 years. And nobody will talk about paper deeds and securities the classical way in a couple of years, because the technology is so huge and so big and can make such an impact that everyone will use it and will become a commodity, and it will change our life as lawyers because we have to be more technology driven than just legal.
Maybe just a brief ad. There is something that is called best practice. So when an investment firm gets an order for a client to buy a security, then they need to buy basically, the cheapest, quickest, in the best way. And that ultimately will lead very quickly to the switch from the traditional paper-based stuff with, settling times of 2 days to the digital versions. So I believe once it's there, it will make click, and then the old version is gone.
I would just say one thing. I think also we need to provide a channel to the general public or to investors so that it's not only that they have a security perspective that they can read, but they can actually buy and sell quickly, just easily. You can think about the Apple model where I should be able to do anything within 3 clicks. It's part of our vision at spot9 where we provide a mobile banking app where people can buy and sell whatever digital assets. We'll start with Bitcoin and Ethereum, but hopefully security tokens in the future just by pressing a couple buttons to link to their bank account. And I think that's part of our vision for the future of investments.
Yeah, for sure.